Get this, UltraTech Cement, one of India's biggest cement producers, just snagged a spot on the Financial Times Asia-Pacific Climate Leaders 2024 list. We're talking about a company that's not just pouring concrete, they're pouring their hearts into sustainability. So, buckle up as we do a deep dive into UltraTech Cement's Q2FY25 report to see how this industry giant is balancing profit with a planet-friendly approach. Expert speakers here to help us unpack it all.
It's a fascinating case study. This report gives us a snapshot of UltraTech's performance, but it also reveals a lot about the challenges and opportunities within the Indian economy right now.
Okay, so let's set the stage. UltraTech Cement, a major player listed on both the BSE and NSE, just released their Q2 FY25 performance report. It's like a sneak peek into their playbook.
Exactly. And the Indian economy is a key character in their story. The report highlights India's GDP growth of 6.7% in Q1 FY25.
Right.
While that might seem decent, it actually fell short of expectations, influenced by factors like the recent elections and a dip in consumer spending.
Elections always shake things up. But hold on. Isn't India considered one of the fastest-growing economies globally? This slowdown feels a bit unexpected.
That's the thing about economies, they're rarely predictable. The report also mentions other economic indicators like stable GST collections, a healthy manufacturing PMI, and this is interesting, the Reserve Bank of India hitting the pause button on repo rate changes for the 10th time in a row. They're walking a tightrope between controlling inflation and encouraging growth.
Talk about a balancing act. But speaking of inflation, it's been a hot topic everywhere, and I'm guessing it's impacting businesses like UltraTech too. What does the report say?
It's definitely a factor. The report specifically mentions rising CPI inflation, particularly food inflation, which clocked in at a concerning 5.5% in September. This impacts UltraTech on two fronts. First, consumers feeling the pinch might think twice about big purchases, impacting housing and construction demand. Second, UltraTech itself is staring at rising input costs.
A double whammy. It's like trying to run a marathon with weights strapped to your ankles. But the report also mentioned some government projects in infrastructure and housing. Could those provide some relief for cement demand?
Absolutely. It's not all doom and gloom. The report highlights increased road projects by the NHAI and Morth music to a cement manufacturer's ears. Plus, government housing schemes like PMAG for rural areas and PMYU for urban areas are giving affordable housing construction a much-needed boost.
So the government's throwing them a lifeline with these projects. But what about UltraTech's own efforts? Are they just riding the wave of government initiatives, or are they paddling too? What's their game plan?
Here's where it gets interesting. Despite those economic speed bumps, UltraTech managed to grow their domestic sales volume by 3% year-on-year. They're not just surviving, they're finding ways to thrive. And get this, they strategically acquired RAKWCT, a white cement and construction materials company in the UAE. It's a clear sign they've set their sights on global expansion.
Wow, a 3% increase in this climate is impressive. But with costs going through the roof everywhere, how are they maintaining profitability?
They're getting lean and mean on the cost front. The report highlights a 4% year-on-year reduction in manufacturing costs for their domestic operations. This shows their dedication to streamlining processes and maximizing efficiency.
Talk about working smarter, not harder. But it's not just about the bottom line these days, right? What about sustainability? What's UltraTech doing to shrink their environmental footprint?
This is where they really shine. UltraTech is going above and beyond to minimize its environmental impact. They've achieved a remarkable 32% green power mix, a whopping 47% jump year-on-year. That's not just a step, it's a leap towards a greener future. And it's not just about renewable energy. They're making strides in CO2 reduction, water conservation, and even incorporating alternative materials. They're walking the talk when it comes to sustainability.
A 47% jump. That's not just impressive, it's industry-leading. But let's switch gears back to their growth strategy. They're not stopping at a 3% increase, are they? The report mentions some pretty ambitious expansion plans.
You're right, they're playing the long game. UltraTech is aggressively expanding its cement production capacity across India with new plants, aiming to reach a massive 183.5 million tons per annum capacity by FY27. They're betting big on the future of the Indian market.
That's some serious ambition. But their growth story isn't just about cement, is it? They've also been diversifying into other areas, like ReadyMix concrete, RMC. What's the story there?
That's another feather in their cap. UltraTech's RMC business is booming with a remarkable 19% year-on-year volume growth. And here's the kicker. They achieved a stellar 40% return on capital employed, or ROCE, in this segment. Talk about a smart diversification strategy.
19% growth, that's huge. Seems like their RMC business is a home run. Okay, we talked strategy, expansion, and green initiatives, but let's get down to brass tacks. How did UltraTech actually perform financially this quarter?
Let's take a look at their financial snapshot. Revenue-wise, they recorded 15,308 crores for the quarter. Now, that's a 3% dip compared to the same quarter last year, which isn't entirely surprising considering the economic headwinds and softer cement prices we discussed earlier.
So the economic slowdown is definitely casting a shadow on their top line. What about their earnings? How did their EBITDA, that's earnings before interest, taxes, depreciation, and amortization fare this quarter?
Their consolidated EBITDA for the quarter landed at 2,239 crore, representing an 18% decrease compared to Q2 of last year.
I see.
This highlights the margin pressure they're facing, as we touched upon earlier with the shrinking EBITDA per metric ton.
It's a stark reminder that even with strong sales and ambitious expansion, profitability hinges on managing those margins. But they did secure that sustainability-linked financing, which suggests investors are optimistic about their long-term prospects.
Absolutely. That financing is a vote of confidence. It shows that investors are factoring in not just their current financials, but also their commitment to a sustainable and therefore resilient business model. And let's not forget, their overall financial health remains strong.
That's reassuring to hear.
Yeah.
But those margin pressures are worth investigating further. What's driving those shrinking margins? Did the report offer a breakdown of their cost structure?
Yes, it did. The report gets into the nitty-gritty of their costs, and it's quite revealing. A key area of focus is their logistics costs.
Logistics are the backbone of any manufacturing business, especially in a geographically vast country like India. What did the report reveal about UltraTech's logistics performance?
They've actually managed to cut down their logistics costs by 2% year on year.
Wow.
This is significant, especially considering the transportation challenges in their industry. They've been strategically optimizing their operations.
That's impressive. So even with rising fuel costs globally, they're getting leaner on the logistics front.
Right.
How are they achieving these cost savings?
Their report highlights a two-pronged approach. Firstly, they've been strategically reducing lead distances. They're optimizing their plant locations and distribution networks to shorten the journeys their products have to make.
Shorter hauls, lower fuel bills, makes perfect sense. What's the second part of their logistics strategy?
Alongside reducing lead distances, they're laser-focused on efficiency improvements. This encompasses a whole range of initiatives, from using route optimization software and driver training programs to incorporating more fuel-efficient vehicles into their fleet. They're leaving no stone unturned in the quest for efficiency.
So it's a combination of smart planning, cutting-edge technology, and investing in their people. But logistics is just one piece of the puzzle, right? Fuel costs themselves are a major factor, especially with their use of blended fuels.
You're absolutely right. Fuel costs are a major chunk of their expenses, and they actually caught a bit of a break on that front. Their overall fuel costs decreased by a substantial 17% year on year, primarily due to lower blended fuel prices.
That's a sigh of relief. But fuel prices are notoriously volatile. Did the report provide any insights into how UltraTech is managing this volatility, especially given their reliance on imported fuels?
They certainly did. They broke down their blended fuel consumption costs, reporting a spend of $133 per ton. That's a 10% decrease compared to the last quarter, and a significant 18% lower than the same quarter last year. This suggests they're actively seeking out the most cost-effective fuel sources globally.
So they're playing the global fuel market to their advantage. But what happens when those prices inevitably spike again? What's their strategy for mitigating that risk?
This is where their commitment to green energy plays a crucial role. Remember their impressive jump to a 32% green power mix. This not only reduces their carbon footprint, but also provides a buffer against volatile fossil fuel prices.
It's a brilliant example of how sustainability initiatives can have a tangible impact on the bottom line. They're not just doing good, they're doing well by doing good.
Speaking of green energy, what did their power costs look like this quarter? Did that increased green power mix translate into savings? It certainly did. Their overall power costs decreased by a significant 7% year on year, largely attributed to that shift towards greener sources. However, it's worth noting that the report also mentioned a slight increase in power costs compared to the previous quarter.
Oh, what caused that uptick? Did they explain the reason behind the increase?
They attributed the slight quarter-on-quarter increase to planned maintenance shutdowns. While these shutdowns might temporarily increase costs, they're crucial for ensuring the long-term efficiency and reliability of their plants, especially their renewable energy infrastructure.
Mm.
It's an investment in the future.
It makes perfect sense to invest in maintaining those assets, especially the ones driving their sustainability efforts. Okay, so they're making headway on logistics, fuel, and power costs.
Mhm.
But what about raw materials? Those are the lifeblood of their business. How did raw material costs trend this quarter?
That's one area where they faced some headwinds. Their raw material costs saw a slight uptick this quarter. They attributed this primarily to fluctuations in clinker conversion ratios.
Clinker conversion ratios. For those of us who aren't cement connoisseurs, can you unpack that a bit?
Of course. Clinker is a key ingredient in cement, produced by heating limestone and other materials at extremely high temperatures. The efficiency of this process, the clinker conversion ratio, directly impacts raw material consumption and therefore costs.
So even with their best efforts to control costs, they're still exposed to external factors like global commodity prices and market dynamics that influence clinker production. It really highlights the complexity of their operating environment.
Precisely. It's a delicate balancing act. They're doing an excellent job managing the factors within their control, but they can't completely eliminate the impact of global market forces on input costs.
This deep dive has given us a fascinating glimpse into the inner workings of UltraTech Cement's Q2 FY25 performance. We've explored their strategic moves, their impressive commitment to sustainability, and even dissected their financial performance. Now let's shift our focus from the what to the why. Expert speaker, what are your key takeaways so far? What's the big picture message here?
UltraTech's story is a powerful example of how, even in a traditional, heavy industry like cement, success hinges on adapting to change. They're not shying away from innovation, they're embracing it, whether it's through their aggressive expansion plans, their relentless focus on efficiency, or their industry-leading sustainability initiatives. They're proving that profitability and responsibility aren't mutually exclusive.
Absolutely. They're demonstrating that a commitment to a greener future can go hand in hand with a healthy bottom line. But their journey isn't over yet, is it? What should we keep an eye on in the coming quarters?
Their ability to navigate these choppy economic waters will be key. We'll want to see how rising input costs and potential slowdowns in construction activity might impact their margins moving forward. Plus, keeping an eye on their ambitious expansion plans and how they manage those investments will be crucial.
It's a great reminder that business is rarely a straight line to success. It's about navigating unexpected detours and adapting to the ever-changing terrain. It's a balancing act for sure. UltraTech is walking a tightrope between managing internal costs, navigating external pressures, and staying true to their long-term vision. But hey, they wouldn't be on the Financial Times climate leaders list if they weren't up for a challenge, right?
Exactly. And speaking of challenges, their commitment to sustainable practices, like that incredible green power mix, is even more impressive when you consider the cost pressures they're facing elsewhere. We've talked about logistics and fuel, but let's loop back to their raw materials. That clinker conversion ratio you explained, what kind of impact did that have on their costs this quarter?
Right, because even with the most efficient logistics and the cleanest energy, you still need the raw ingredients to make cement. Did they quantify the impact of those fluctuating clinker conversion ratios on their overall expenses?
Well, they did. While they didn't give a precise figure, they did indicate that it contributed to a slight overall increase in raw material costs for the quarter. It's a reminder that even with their focus on things they can control, some things are still at the mercy of global commodity markets, and those can be unpredictable.
It's like trying to bake a cake when the price of flour keeps changing. No matter how good your recipe is, you're still impacted by those external factors.
Right.
But it sounds like UltraTech is doing everything they can to manage those variables, from optimizing their fuel sourcing strategy to investing in green energy to reduce their dependence on fossil fuels.
Absolutely. They're demonstrating that a holistic approach to sustainability isn't just good for the planet, it's also a smart business strategy. It gives them more control over their destiny and helps them navigate those inevitable market ups and downs.
It's a great example of how sustainability can be a shield against volatility, not just a feel-good initiative. Well, expert speaker, we've dug deep into UltraTech Cement's Q2 FY25 performance today. We've analyzed their financials, explored their strategic moves, and unpacked their impressive commitment to sustainability. As we wrap up this deep dive, what's the one big takeaway you want our listeners to remember?
UltraTech Cement is a company to watch. They're proving that even in a traditional resource-intensive industry, it's possible to thrive while also being responsible. Their journey shows that embracing innovation, prioritizing efficiency and committing to sustainability can be a recipe for long-term success, both for the bottom line and for the planet.
Beautifully said. UltraTech's story is an inspiring reminder that even in a world of concrete and steel, there's always room for growth, innovation, and a commitment to building a better future. That's it for our deep dive into UltraTech Cement. We hope you've enjoyed this journey into the heart of India's dynamic cement industry. Until next time, keep exploring, keep questioning, and keep diving deep.